Okay, let's talk about Phoenix real estate stats for November 2024, almost at the year end. Let's get right into it. A lot of the stuff that I pull is going to be from the Cronford report. That's what you're seeing these slides from. One of the most important factors that we're going to look at is active. What is our supply looking like? It's been increasing over the entire year. So now we see almost the full year in swing. You can see that we were just kind of trucking along, not really doing much of anything, pretty unremarkable, until finally we hit this point and started to turn up, right? So what makes our inventory go up? You have fewer buyers, or you have more new sellers coming onto market. You have fewer cancellations. So let's dig into that a little bit. Right here was our inflection point. So August 3rd, that's when that change made. All of a sudden, August 3rd, we start to see more listings start to build in our inventory. So as you can see here, actually, let me clean this slide up a little bit. Let's just look at since July. See 2024, that's the green line. All of a sudden, August, we put another extra 1,000 listings to the market, right? And then we did a small increase in the past few months after that. That's what's led to, this increase, right? So all of a sudden you have more of these sellers coming to market. It's growing our inventory, which is not necessarily a bad thing. We're right around 22,000 at the moment when you open Armless, and that's a pretty healthy place to be if you're in 2016 or 2017, and you can remember at that time. That's what our normal inventory level sat at. Under contract, that's your demand line. We finally saw that thing break through us, right? So this is the purple line down here. We've been kind of weak all year. We were just hoping it would break through what we did last year in 2023, but it never quite did. It scared us a couple times, but it was always disappointing. And then finally, about 2 months ago, we broke through that line, and now we exceeded the number of homes under contract on a weekly basis. And then we broke through 2022. But only for a couple weeks, right? Now we're back down to matching 2022, and it's kind of anyone's guess as to whether we will hug that red line, stay above the red line, or go back under and have fewer than we had in the last couple years again. Here's a little bit closer look of that trend, that transition. We broke through that pink line, broke through 2023, we broke through 2022. Now we're right back there. So we'll see what people do. We expected there to be a huge spike, when the rates dropped back in August, and we kind of did. We saw quite a few buyers come to the table, and I think that's really what led to that number of under contract rising like that. But sellers caught wind of that too, and when they rushed to put their homes on the market to get them ready for those buyers that they were expecting to run to the market, it didn't quite happen. But now the gate has been opened, and all these listings were coming to market no matter what. So that's what's a big part of what's leading to our increase in inventory. Contract ratio, you can use this anywhere, in your subdivision, zip code, in your town. This is a good way to tell just the general relationship between the number of active listings and under contract, right? So if you're at 31.5, if no new listings come on, within about 3 months, your demand should eat the supply that's there. Does that make sense? So 31 out of 100 listings that are active, 31 are under contract. So that's to say, once those close, another 31 would go under contract again and again and again. That's how you get a general idea of how the market's doing. We started to taper down a little bit sooner than we normally do, right? So you can see in April, we started to decrease. Usually that lasts until May, sometimes June, but we started that pattern a little bit earlier this year, and we're all the way down to 31.5, which is not awful, but compared to the past 6 or 7 years, it doesn't feel like it, right? So this is what a normal pattern looks like. You rise in the spring, and then it sort of slows down into the fall. You rise in the spring, in the summer, or it goes down in the fall. Funny thing is, I cut out a few of those wacky years. I cut out 19, 20, 21, and 22. Those are all not following these seasonal patterns for one reason or another. But you can see we are a little bit slower, and it started a little bit earlier than some of those previous patterns. So we'll see if we can match one of these in 2025. Our Cronford Market Index, this is our forward-looking index. it's been dropping ever since about July. It finally broke through what we call the balanced market. So now, technically on paper, this should be alluding to more of a buyer-favored market, although we're not really seeing that land out in the field yet. So we'll need the market to be in this position for probably maybe 6 months before you actually start seeing a change in behaviors and pricing, before it really starts to look like an actual buyer's market. But you can see it's been drawing down. Ever since then, we thought maybe the interest rate improvements would change the course of this, but it sure didn't. We're just riding that little baby down. So we'll see when it turns around. Not a whole lot of change. This is looking at the Cromford market indexes per city. The good thing about this screen is it shows you that, we may be at 91.5 for the whole valley, for all of Phoenix Metro, but Fountain Hills, they're at 166. Glendale, they're at 115. Maricopa, you're down at 64. So you have these very different market conditions in each of these cities. And it goes all the way down to, like I said before, to a neighborhood level, subdivision level. So if you can really refine that and get an idea of how many actives you have and how many are under contract, that's telling you how swiftly that area is moving. And that has everything to do with buyer behavior, right? So, and what your expectations should be. So if you always kind of know what to expect and know what's telling you, oh, that we're priced in the right area, or we're priced in the right range, that's going to be really helpful. So if you know that only 2 or 3 showings are happening on the average house every week or 2 weeks, then you know that you're kind of following the norm. If people are getting 10 showings per week and then they're going under contract within 3 weeks, you don't have any showings at all in your first week, you have a problem, right? So this is how you sort of manage your expectations of how your marketing should be playing out in the market. That's kind of the market in a nutshell. I mean, Phoenix, Metro is its own beast. So I thought it was kind of interesting to look at some of these other ones. We've got Austin is at 79 days on the market. That's their average. We've got a Johnson County over in Kansas City, 33 days. Indianapolis is 18. Let's see, we've got in Virginia, you've got 8 days on the median. I think we got one more interesting one. Cincinnati, 8 days. So they're hot, baby. Hot city. It just goes to show you that when you look across the entire nation, we've got all these different experiences that people are having just based on their local economic conditions, and you've always got to just narrow down your focus and figure out what your city's doing, and then narrow it down even more to figure out what your area, what your neighborhood's doing, so that you can know exactly what you should be seeing. When you do that, you can sort of plan this, right? So if you're a seller and you're selling your home, if you have showings and offers, you're good. You're gonna get it sold. It's gonna sell within, the average is around 98%. When you're above that, you're in these other zones. If you're getting showings but you're not getting any offers, then that's not the behavior you want to see, right? So if you call around these other listings and see what kind of activity they're getting, if they're getting offers and you're not, you might have a pricing issue. So this is all part of the analysis that we do when we have clients with their homes listed active. That's all I got for today. Keep it short, but in a world where you can be anything, be kind. Always keep that in mind, especially when things are shifting and people are frustrated and confused. Just be nice. Make everybody's day a lot better. All right, until next time.